Now speaking, Tina Romani, Head of Investor Relations. Good morning everyone. Our Chief Executive Officer, Thibaut Mongon, and our Chief Financial Officer, Paul Roux, are joining us on the call today. We will be discussing our operating and financial performance, market opportunities, and our growth. We want to remind our audience that our statements today are forward-looking and may differ from our actual results due to various risks, uncertainties, and assumptions. We will also be referencing certain non-GAAP financial information, which should not be considered in isolation or as a substitute for financial information presented in accordance with GAAP. Our press release and presentation on our IR website provide a reconciliation of these items to the nearest US GAAP measure. We are excited to share our progress and look forward to your questions. Now speaking, Thibaut Mongon, Chief Executive Officer. Good morning and thank you for joining our second quarter earnings call. Kenvue had a very strong quarter, with over $4 billion in net sales and organic sales growth of 7.7%. This is one of the strongest quarters in our 135-year history and the strongest since the beginning of our business transformation in 2019. Our growth was broad-based across all segments of our portfolio and across all geographic regions. We saw double-digit growth in self-care, continued recovery in skin health and beauty, and growth ahead of our long-term expectations in essential health. We delivered balanced growth across all geographic regions, with North America contributing about half of the growth with all other regions representing the remainder. We saw higher incidence rates drive continued demand for our leading brands such as Tylenol, Motrin, and our other brands in need states. We also saw innovation, premiumization, and healthcare professional recommendations fuel market share growth for many of our brands. Our margins continue to be healthy fundamentally when excluding non-operational impacts such as FX or standard company costs. We used a combination of strategic value realization, both price and mix, and productivity initiatives in our operations to offset a significant portion of these costs. Private label penetration for our categories remained stable on a global basis this quarter. We have a resilient portfolio with iconic brands well balanced across categories and geographic markets. We have an infinite ability to expand usage occasions and give consumers around the world new opportunities to take care of their health. We anticipate full-year organic growth to be between 5.5% and 6.5%. We will continue to stay focused on delivering superior, science-backed, efficacious health solutions to serve the needs of our 1.2 billion consumers around the world. We will deliver a consistent cadence of innovation and marketing programs to drive growth on our priority brands. We will return to a normal cadence of innovation with a strengthened and more resilient supply chain and reactivation of marketing campaigns to continue to build momentum in our brands. We expect science-backed claims and innovation launches to drive category essentiality and relevance, and effective execution while strengthening brand equity in priority markets. Now speaking, Paul Roux, Chief Financial Officer. Thank you for the opportunity to present our quarterly earnings call. We had a strong and balanced quarter with every segment and geographic region contributing to our 5.4% reported growth and 7.7% organic growth. Value realization, which is comprised of price and mix, represented 9.4 points of growth. Volume remained strong with only a 1.7-point decline, which includes the impact of intentional strategic portfolio rationalization initiatives and the decision to suspend the sale of personal care products in Russia. Self-care had another strong quarter with the segment gaining share globally, driving 14.2% organic growth. Skin health and beauty had organic growth of 3.4%, comprised of 6.6 points of value realization with 3.2 points of volume decline. Essential health had organic growth of 3.8%, comprised of 10.7 points of value realization and 6.9 points of volume decline. Adjusted gross margin was 57.5%, and adjusted EBITDA margin was 24.5%. Adjusted net income was $581 million and adjusted diluted earnings per share of 32 cents. Our board of directors declared a third-quarter dividend of 20 cents per share. For the full year, we expect net sales growth to be between 4.5% and 5.5% and organic growth to be between 5.5% and 6.5%. Reported net interest expense is expected to be approximately $270 million and approximately $300 million on an adjusted basis. Reported effective tax rate is expected to be between 34.5% and 35.5%, and adjusted effective tax rate is expected to be between 24.5% and 25.5%. Adjusted diluted EPS is expected to be in the range of $1.26 to $1.31. We remain committed to investing in our business for the long term with an eye toward delivering attractive total shareholder returns in a balanced way. Now speaking, Thibaut Mongon, Chief Executive Officer. Thank you, Paul. We are pleased to report strong second quarter results in our first quarter as a publicly traded company. Our unique model as the world's largest pure-play consumer health company has enabled us to leverage our competitive advantages and deliver robust financial performance. We look forward to answering your questions. Bank of America Merrill Lynch analyst Anna Lizzle inquired, "Are you on track for product innovations to contribute 10% of net sales this year? What gives you confidence that consumers will still spend on higher price innovation in consumer health?" Thibaut Mongan replied, "Good morning, Anna. Innovation is a cornerstone of our business at Kenvue. We have a 135-year history of first-to-market innovation and we plan to continue this trajectory. This quarter, we launched several new products and initiatives that have been well received. We are also excited about what we have in the pipeline for the back half of the year. Innovation for us means not only new products, but also new claims and clinical data that give consumers and healthcare professionals more reasons to use our brands. Regarding consumer confidence, we have not seen any downgrading in our portfolio. Excluding intentional discontinuations, our volumes were flat in the second quarter despite strong value realization. Consumers remain focused on their health and well-being and are looking for trusted products, solutions and brands that have been in their households for years. This is why we are confident that our brands will continue to be the go-to choice for consumers around the world. Bank of America Merrill Lynch analyst Anna Lizzle inquired, "Are you satisfied with your current distribution with retailers such as Walmart, Target, and the drug channel? Are there any areas where you could expand distribution domestically or internationally?" Thibaut Mongan replied, "I'm pleased to report that we have made progress in recovering our distribution points, both domestically and internationally. We have been working closely with our retail partners to ensure our brands are well represented in the marketplace. We anticipate further recovery in the back half of the year." Citi analyst Filippo Falorni inquired, "What is your outlook for price and volume in the second half of the year, and do you have any additional pricing actions planned?" Thibaut Mongan replied, "Good morning, Filippo. Regarding the back half of the year, we expect to comp a higher base than we had in the back half of 2022 due to recovering service levels. Additionally, the first half of 2023 saw two items that we don't expect to repeat in the back half: retailers restocking our products significantly and a strong winter season. We are planning for a more normal winter season this year. We anticipate organic growth of 5.5 to 6.5%, driven by value realization, price, and mix, with targeted price actions to cover elevated input costs, as well as premium innovation and favorable mix." Citi analyst Filippo Falorni inquired, "Have you seen any evidence of pull forward in demand for self-care products due to the strong cough and cold season? Is this factored into your guidance for the segment?" Paul Roux replied, "Good morning, Filippo. This is Paul. We did not observe a pull-through in our inventory or retail inventory. Seasonalities are normalizing as expected, so we did not see a pull forward in demand for the second year. We anticipate a normalized season for the remainder of the year." JP Morgan Chase & Company analyst Andrea Teixeira inquired, "Can you speak to consumer behavior at the end of the quarter and how price elasticity is affecting it? What are the puts and takes of retail inventory, pantry inventory, and consumer demand?" Thibaut Mongan replied, "Andrea, our consumer health space may behave differently than other consumer staple categories. We provide efficacious solutions to meet real needs of consumers worldwide. We have a strong portfolio of trusted brands that are often synonymous with our categories. Consumers are focused on their health and wellness and seek trusted products recommended by healthcare professionals. Our key segments of self-care, skin health and beauty have seen volume increases, excluding intentional discontinuations. Private label penetration has remained stable. Neutrogena Sun is doing well in the summer season, gaining market share in the US. We make sure our products are accessible at different price points to meet the needs of different consumers. We have been doing this for 135 years and intend to continue." JP Morgan Chase & Company analyst Andrea Teixeira inquired, "What impact has the health-oriented focus had on other categories such as Listerine and adhesives and wound care?" Thibaut Mongan replied, "Essential health had a strong quarter, with 3.8% value realization and mid-single-digit volume decline when excluding discontinuations. Wound care had a good quarter, with strong customer partnerships and successful innovation with Band-Aid. Listerine gum therapy was the #1 new code in the US this quarter, with consumers responding well to its 4 times healthier gums in 3 weeks promise. We saw some softness in the category in Asia, but we continue to gain share there." UBS analyst Peter Grom inquired, "Can you provide more insight into the decline in gross margin in the quarter and how we should expect it to progress for the rest of the year?" Paul Roux replied, "Good morning, Peter. We've been navigating a volatile environment for a couple of years, but we've been doing it consistently with our experience. In the quarter, we faced elevated inflation and transactional forex headwinds. We have an arsenal of tools to offset the gross margin pressures, such as supply chain efficiencies, premiumization, innovation, RGM and value realization. We believe these levers will continue to be utilized in the second half of the year. We also have a continuous arsenal of ideas for total end-to-end network optimization and the carryover of pricing to help offset the still inflationary, yet diminishing, commodity headwinds. We feel confident in our ability to maintain healthy gross margins." UBS analyst Peter Grom inquired, what trends have you seen in the Chinese market in the past quarter and what gives you confidence that performance will improve in the future? Thibaut Mongon replied, I'm pleased to report that our performance in China this quarter was strong, with double-digit growth. Our self-care segment was particularly successful, while other categories experienced some softness. We anticipated this, and while the recovery is slow, we remain confident in the long-term prospects of our business in China. The success of this quarter is a testament to the power of the Kenvue portfolio. Goldman Sachs analyst Jason English inquired, what drove the offset in APAC sales growth from double digits in China to 1.3% overall? What caused the slowdown in EMEA sales growth from 9.3% to 3.5% despite a moderate FX headwind? Thibaut Mongon replied, thanks for the question, Jason. In Asia, we saw competitive and category dynamics that had a negative impact on our mouthwash business in China, Japan, and other parts of the region. India had a soft quarter, and emerging markets in general were down. In EMEA, however, we saw strong demand for our products in self-care and skin health, and overall we're pleased with the performance of our European region this quarter and first half. Paul Roux replied, Jason, you are correct that the foreign exchange headwinds remain, but they are moderating. The underlying strength of the business is still there, and we have seen elevated incidences of flu in the second quarter. Despite these pressures, we remain confident in the core of our business. Goldman Sachs analyst Jason English inquired, can you provide insight into whether or not we can expect a self-care slump as the COVID and flu tailwinds fade, and what are the reasons for durable growth? Thibaut Mongon replied, Jason, our guidance of 5.5% to 6.5% organic growth for the full year takes into account our current thinking that the season will be normal. We don't anticipate the same level of demand as last winter, but we are prepared operationally to respond to any seasonal needs. Our self-care segment is comprised of more than just cough and cold or analgesics, and we've seen success in other need states like smoking cessation, digestive health, and allergy. We've gained share in the US with Zyrtec and Benadryl, and we're confident in the continued performance of the segment. Deutsche Bank analyst Steve Powers inquired, could you provide more clarity on the growth in skin health and beauty and essential health compared to your internal forecast, and when you expect to cycle the portfolio rationalization headwinds? How do you expect the three segments to contribute to the 5.5% to 6.5% organic growth call for the year? Thibaut Mongon replied, Steve, we don't provide guidance by segment, but I can tell you that our portfolio is very important to us. We are anniversarying the decision to suspend sales of personal care products in Russia this quarter, and we have discontinued slower-moving codes to free up capacity in our supply chain. We remain focused on the velocity of our cost to ensure our portfolio is as productive as possible. We are confident in the future of our skin health and beauty business, with volume up low single digits this quarter and strong value realization. We still have room to grow in terms of distribution points in the US. Deutsche Bank analyst Steve Powers inquired, what are your planned investment levels and where do you expect to prioritize them for the rest of the year? Paul Roux replied, Steve, thank you for your question. Our investment philosophy remains unchanged since becoming an independent company. We are focused on maximizing return on investment, and we are investing in our brands through advertising, healthcare professional representation, and promotional impact. We are balancing these investments to ensure the highest return on investment. We are pleased with the performance and will continue to fuel the growth of our brands through a balanced investment approach. Exane BNP Paribas analyst Navin Tai inquired, can you discuss the supply chain improvements that benefited the second quarter and how they may benefit the rest of the year? Can you detail the breakdown of pricing versus mix within the 9% value realization? Has there been any change in Kenvue's dialogue with J&J regarding monetizing the stake in Kenvue? Paul Roux replied, in response to the question about price/mix and supply chain improvement, we don't disclose the mix between the two. However, we have invested in increased capacity and resiliency of our supply chain, resulting in improved service levels. We are pleased with the progress so far and expect the back half of the year and beyond to benefit from these investments. This includes stronger partnerships with our retail partners to ensure products are available on shelf when consumers need them. Thibaut Mongon replied, Navin, Johnson & Johnson has announced their intention to separate Kenvue from their company. We are prepared and have been operating independently. We are optimistic about the future. HSBC analyst Jeremy Fialko inquired, Jeremy Fialko, HSBC, could you provide an overview of your advertising spend in the quarter, including whether it was up as a percentage of sales? Additionally, what are your plans for advertising spend in the second half of the year? Have you seen any changes in competitor behavior, such as increased advertising or trade promotion due to lower raw material prices? Thibaut Mongon replied, Jeremy, thank you for your question. We remain committed to investing in our brands and demand generation activities. We have two main channels for this, direct-to-consumer demand generation and healthcare professional recommendation. We are on track with our investments and intend to continue investing at the same level. We don't disclose advertising expenses on a quarterly basis, but we do provide a full-year report. Advertising is only one part of our demand generation model, with healthcare professional recommendation being another important part. We are confident in our investments and will continue to invest in our brands in the second half of the year. Thibault Mongan replied, "Thank you for joining us today. We are delighted to report that Kenvue had a successful debut as a publicly traded company this quarter. Our iconic brands and the strength of our operating model drove strong results across the board. We are confident that our progress will continue and we look forward to keeping you updated on our progress in future earnings calls. Thank you."